Hey, y'all. Good evening, everybody, and welcome to the Core 4 show. My name is Sonia, and I am your temporary host for tonight. Brandon is delayed in traffic after a meeting, so he is on his way and he'll be here shortly. But I'm going to go ahead and get us started. We have a great show this evening. So I'm going to go ahead and introduce Chris, and he's going to get started with our core forecast for the evening. Hi, Chris. How are you doing today?
Hey, Sonia. Happy Sunday, everybody. What's up, Core 4?
Let me take.
I've got my screen ready when you want to pop it up, and we'll go off with the forecast.
Thank you.
Perfect. Okay. So last week on the Core 4 show, we talked about the impressive streak that the markets have had. We were up 16 of 18 weeks on the S&P and on the NASDAQ. That streak was broken. Here's the SPX. Here's the weekly time frame. You can see that we closed, and it really was just a massive sell-off on Friday. Friday was a fantastic zero DTE day. That means 0 days to expiration for a nice short. We had the high in the day. It was a non-farm payroll release. Market drifted up in the morning to around 51.89. Ended up, I wouldn't say crashing, but certainly for the day, that was a big drop in price. You look at the SPX down about 60 points. You look at the high around 518 to a low and close around 511. That's a $6 to $7 move on the SPY, which is about double the average. So we had a really nice kind of reality check for the markets. Another thing that I noticed, so again, I'll go back to the SPX and the NASDAQ. You can see that little sliver of red. So we officially closed red, which gives us 16 of 19 weeks, which is still an impressive run, one of the biggest bull market runs we've seen in a while. And the structure still isn't broken. I'm still overall bullish on the general direction of the market, but I still would love to see more of a correction. I mean, finishing a sliver red from last week does not necessarily mean we had a correction. I don't think it's time to buy the dip. I think that we continue to see overextended conditions with divergence. So going into this week's trading, we have a lot of news. Here's your SPY on the weekly with that red sliver. So 16 of 19 weeks bullish. Here is your QQQ, 16 of 19 weeks bullish. The Qs had a little bit rougher week where they finished nicely red. So the highs run 449. Down to 434. That's a $15 candle, which the average is around $12 to $13. I think we're showing about 12.90. So again, still an impressive run. Structure-wise, we're still in a bull market. I would love to see a pullback. Again, just a 3, 4, 5% correction. It's still healthy in a bull market. It's just funny how this really was just an end of week Friday. It happened late in the day. It just kind of ran up through the morning through non-farm payroll. And then started to fade the entire day, which was kind of nice to see. So I remain, and for myself and trading and Streamwise Capital, I remain, taking stabs at the downside because I think we have some really nice reward to risk setups. But longer term, over the medium to long term, until we get to May, June, when the Fed's ultimately going to start cutting rates, even if it's a tester at 25 basis points, I still think that we still have some runway ahead where the stocks will continue to show signs of melting up. One of the big takeaways that I took from last week was watching a stock like Costco. You can see the levels that I had on here. I was doing some option trades where we were up and we kind of breached my levels. I was basically, taking a position to sell it, take a position to buy it, and that came right back into my profit zone last week. So that was nice to see. And then also looking at the big crazy hype stocks like Nvidia. Nvidia, well off the highs. So we got to 974, faded all the way back down to 875. The big question now is, will Nvidia poke that $1,000 mark? And I think that they can. I think that they probably will. But what would be really nice is to see that we have overbought conditions with divergence. If we just looked at something from a swing, let's take, and this is kind of wild, but let's take a swing on Nvidia here and say that we have just a Fibonacci low and a Fibonacci high. Well, we've extended through that, that 618 extension by quite a bit. If we drag another fib from this pullback here, okay, to that high, if we're putting in a high where Nvidia struggles to take out that level, common pullbacks, even if we have a shallow market, would be a pullback to the 236 or the Gann retracement level of a 30% or a 382. this still keeps a bull market very much in check. I think there's going to be some interesting buy the dip opportunities on Nvidia. I wouldn't be surprised if 1,000 remains the level, but I think we had a bit of a shakeout very aggressively, or some heavy profit taking when it came to the price action on Friday. If we take a look at gold, gold's one of the big stories right now. I said this on the Core 4 show last Sunday. If we break above with this weekly candle, I am very bullish on gold. I already have the move measured out with this multi-year breakout. So we have highs here around 2072, tested several times. We had the illiquid holiday spike, and we came up to finally close above that. So any type of pause or bull flag, any type of pullback towards 2100 or 2075, I'm looking for opportunities to respect this resistance to become support. It'd be something like this. We have a break, we have a pause, and then looking for more. If we have a break, we have a retest. I'm looking for more. So this is my measured move all the way to 2470 on gold. And I am in that with some synthetic plays on GLD. I'm just trading options around this, but I measure the move. You can see the multi-year breakout as well, projected up here towards 232. So I am bullish on this. Gave myself a window out to May, gave myself a window out to December, and I'm going to continue to lower my cost basis and look to go long on gold. Bitcoin doing pretty well. We're back up towards all-time highs. This is another interesting setup where Bitcoin and crypto trade 7 days a week, and with this recent run, we've tested the all-time highs. We take this recent run. I wouldn't be shocked to see a bit of a pullback. Okay, now we had a violent pullback as soon as we poked those all-time highs. I'd like to see it tested one more time. If we can have a little bit of sideways movement right in here and come back in for maybe a dip around 60,000, anything deeper than that would be excellent. If we can pull back to like 55K or 50K, very interested in buying dips and looking for trendline breaks to continue to see Bitcoin continue its rally, but look and see if we can do it in a healthy kind of wave structure as opposed to just a rocket ship to the upside. So I still like buying dips on Bitcoin. I'm long on gold. Because of gold, I'm also long on silver. Silver is really nice off those lows at $22 with resistance around 26. If silver ends up outperforming gold in any way, shape, or form, we get a break above 26. I'm looking at gold all the way, or I'm sorry, silver all the way up to $30. And I've got the measured move right here based on some symmetry. I'll put that on the chart right now. So take my rectangle. There's my swing. And then I plot that swing based on that low. That would be my projected symmetry on silver. So right in there around $35. So again, we break above 26. Gold and silver both could have some really nice performance to the upside. What's going to be a factor we have to keep our eye on? It's going to be the dollar index. Okay, dollar index this week, I'm watching very closely. If we are going to see a turn on the dollar, this is the week that we need to see a turn. If the dollar index closes back into this yellow box, I think this is a left tip, center tip, right tip forming, and we might have a rally on the dollar coming. I say that because if the dollar rallies, expect to see the stock market dropping. Okay, if I'm wrong about this and the DXY continues to head lower, then we're gonna see the market continue to fight to the upside and melt up higher. So it is a really interesting correlation. Watch the dollar, watch the S&P, see how they play out. Year to date, right now, we're still clinging to those 7+% gains on the S&P. I had this written down year to date. So the S&P is up 7.42%, the Nasdaq's up 7.2%, and the Dow is actually outperforming both of them, believe it or not, at 7.7%. Another big story before I let James on here is looking at Apple and Google. The mainstream, the big Mag 7, right? Apple's number one in market cap. It's, what, $2.64 trillion company. This decline off the highs has wiped out close to $200 or $300 billion worth of market cap. And we're about a 15.5% drawdown. Now, I do wonder if some of the hype in Nvidia's and all the semiconductor space and the AI space has had a good run. There's some heavy profit taking. Maybe they start to rotate back into those safer large cap stocks. I'm interested in buying some credit spreads and looking at some out of the money action on Apple to the upside. Same thing on Google. We started off on rough footing for both Apple and Google. There's certainly trouble ahead, but I don't think anybody in the right mind coming into 2024 with a bull market out of that November December rally, I don't think anybody would have imagined that Apple is down 15+%. I don't think anyone would have imagined that Google is down 15% and that the NASDAQ would be making all-time highs, right? But it is. So it's an interesting type of rotation where large cap, ran its course last year, rotate into Nvidia, rotate into the semiconductor AI space for those quick gains and that crazy momentum. But here we are with a little bit more of a dose of reality. So, like I said, interesting week. Dollar index, watching gold, watching silver, watching Bitcoin, watching the SPY and the S&P. I will say the news to look out for, and James can piggyback on this. We have CPI this week for the U.S. We have PPI this week for the U.S. We had non-farm payroll last Friday, and so that news will be yet again another major catalyst. Look for some volatility this week. Thanks.
Thanks, Chris. As always, we appreciate your insight and your expertise. So thank you again for this week. Before I turn it over to James, I'm going to go ahead and introduce Brandon, since he is joining us. So thank you again, Chris.
My pleasure. Thanks.
Good job. Good job. All right. Sounds good. So, James.
How's it going?
It's fantastic. I know you got a lot of work for us. I'm going to step off the stage and I'm going to let you go.
All right. Thank you so much. So as Chris talked about briefly, we do have CPI numbers coming out. That is Consumer Price Index. That's the measure of inflation that is used, the most prominently used measure of inflation that's reported. Other measures of inflation are PCE price index, as well as another major measure of inflation, which is the producer index, the PPI number. Now, what that does is that is the cost of finished goods and services. So what it is sold at. So not just your input cost, but now it is your throughput cost with increased cost of labor, et cetera, et cetera, et cetera. We're looking for this. It's forecasted to go down to 0.2% from 0.5%. This will be a very interesting read because of what happened with non-farm payroll. We saw non-farm payroll. We saw unemployment increase because of the revision down last Friday. So there was a revision. The previous non-farm payroll for January came in at 353,000 jobs. Well, basically on whenever those announcements happened, the government said, wait a minute, we kind of we miscounted, maybe they count here in Florida, who knows, but came in at 229,000 actually. So just a slight miscount there. And then they came in higher than expected, but average hourly earnings was lower than expected. And the unemployment rate was lower than expected. All causing a decrease in the value of the US dollar. So we saw across the Forex market several hundred pips worth of movement in just a little bit of time. Now, the other big news that I believe will affect the stock market, the Forex market, and pretty much any market that you could be trading, it more than likely gold as well, being a kind of a quote unquote safe haven, is the Japanese yen. So the Japanese yen, Bank of Japan, two big things came out. One is Bank of Japan is leaning toward ending negative interest rates in March. The key determinant will be the outcome of the March 13th wage talks. That is, yes, just a couple of days from now. So when those wage talks become public, what is happening with public wages, et cetera, et cetera, et cetera, happens, we will have a clearer insight. And this is what Governor Ueda, who is the head of the Bank of Japan, has said, is that, look, we want wages to be higher before we raise interest rates. So that way we're not crushing our people by higher interest rates. We want them to be able to afford higher interest rates. So, it's a really novel concept there, preparing the citizens for what's going to happen. And then another thing that came across, something I was reading this morning on Bloomberg, is they are looking to end their government bond buyback program because they're going to try to push yields to higher than 0%. Now, this would be the first time since 2007 that we've seen that. Now, Japan is known as a safe haven currency. So if people, it's a risk on, risk off scenario. But if we see a flux of money into the Japanese yen, that means it's going to come from somewhere. It'll probably come from the US dollar as well as Europe. And we will see the yens strengthen across the board, which could yield thousands of pips because it is at an all-time. The yen is at an all-time low right now that it has ever been, and they have had negative interest rates for about 13 years. So this is a very, very important week and month for both the Bank of Japan and the U.S. because on March 20th, 10 days from now, we have the central bank rates for the United States coming out, as well as what's more important than the rate, 97% chance that it's going to stay the same. But what's more important than that is the speech given after the rate is read, where Jerome Powell will talk about when they anticipate to cut rates. So you have the Bank of Japan increasing rates, the U.S. decreasing rates, so that we could see a shift in the Forex market as well as, and it will affect the stock market as well. So stay tuned to the Core 4 show. Myself and Chris, we're always going to bring you the best information as quick as possible. Oh, I lost you, Brandon. I don't have the audio from you.
Oh, is that there?
Yep, now I got you.
You know what? And I love what we talked about this past week. And what people really have to understand is that all of this information that you and Chris are given is going to help shape how they invest, how they strategize. And so I just encourage everybody to feel comfortable contacting you guys and really getting to know like what you're offering, how you're offering it, and how it can impact their life. So thank you.
Absolutely. All right. Thank you so much.
All right, guys. So, one of the things the Core 4 show is all about is helping you to keep the liquidity in your own wallet. And the way we do that by keeping the liquidity, and I'll just add this up here, is understanding our report. And so having testimonies where the money is in our wallet, it's in our brokerage house, is important because you're going to want to grow your capital. And sometimes you want to be a passive investor, and then sometimes you want to be an active investor. And to know the difference between the two is what's critical. And for most of us, we don't know where to begin. And so we have incredible coaches that have created courses for you guys to be able to take so that you can actually educate yourself and take responsibility by minding your business and saying, all right, if I want to get 8%, 10%, 9% a week, a month, a year, whatever it is, that you have an opportunity to do that. And you can take a look at the success that we have here at Core 4. And you can also take a look at the success of the coaches. And so one of those projects obviously is the Forex, and the Forex fluctuates. So we don't talk much about that, but what we can say is that by getting involved in the Forex, you probably are going to understand that last year we got over 50,000 pips. As you learn more about what that means, then that's what's potentially possible. And we're not giving you any financial advice. We're just telling you that that's what we're doing for ourselves. So there's an opportunity for you to do that too. Now, we have binary options, and we have two wonderful coaches in binary options. And so they have their own courses, and they have a unique perspective on how they approach their strategies for binary options. We also have, who's also our guest today, we have yield farming. And yield farming is an incredible opportunity. You're going to learn a lot about what that is and how it works and what it means to you. But the first thing you want to do is you want to take the course, get familiar with the course, get familiar with the coach, and then from there, take advantage of the opportunity to grow your capital. So to give you an example, this week, we only traded Monday, Tuesday, and Wednesday. And let me see if I can share my screen with you guys. And so just Monday, 6.09, Tuesday, 9.44, Wednesday, 9.04, for an increase of the account of 24.57% for the week. 8.9% average. So 24 this week, last week, 44, 29, 35 the week before, 46, 48, 37, and then also 18. And that's just phenomenal. And as I bring to the stage, probably the Michael Jordan. You like Michael Jordan, Coach? You like the name Michael Jordan?
I don't know, man. I'm starting to like LeBron now.
Okay,
I gotta admit, man. I mean, he's he's kind of undeniable at this point.
He's pretty good. He's pretty good. But what I'll say, who's better is you. Like I will put my ducats to work with you than to watch him shoot some jump shots. I want to watch you actually get some binary options going. So tell us a little bit about like mindset that you have in order to be as successful as you've been in this. Can you just tell us that for a second?
Sure. Yeah. I mean, so there's a lot of things that goes into it, Brandon. It's just the willingness and the absolute refusal to lose, and you've got to have a willingness to learn, and you've got to have a willingness to take a risk. I mean, there's a lot of real smart people on here, and that's great as far as it goes. I mean, there was a time in my life where I liked to sound smart too, but now I don't give a damn about sounding smart. The only thing I give a damn about is making money, because money, you either use it for the right reasons or you use it for the wrong reasons, baby. But money is money, and money is energy, and money is power. Friends are overrated. Your wife, your husband will cheat on you, stab you in the back. Your job will fire you. You got your pension at 20 years. They will fire you at year 19 every time. Your country will turn on you. Money is what matters. And if you don't believe it, hey, live a little while longer, and you will. But, man, I've been having a good week. I've been getting a lot of pushback from my take on Ed Zimbardi on my YouTube channel. You don't have to go to the Unlimited Freedom Network, guys, because I've got plenty of subscribers already, and I've got plenty of views. So you don't even need to go there, right? Because I don't need you to look at it. But because I got plenty of people who look at it anyway and watch it anyway. Oh, and while I'm on the topic of that, thank you guys for all of your support and your kind words. You know, you guys really are, you really are something over here in the Core 4 community. But I'm going to start to need to see some actual action on your part, because talk just doesn't do it for me. Talking smart doesn't do it. You know, support doesn't do it. And if you're looking to use me or Chris or James or anybody else as a stepping stone to get to Brandon, let me tell you something right now. Just leave me the hell out of it. If you want to learn how to make money, you can come to me and you can get my course. And for a limited time, I'm giving a special offer to the Core 4 community.
Yep.
But if the Core 4 community doesn't want that offer, I'll be just fine without you, I promise. Thanks.
Thank you, Coach. So we have another coach that's doing binary options, doing a fantastic job as well. And her name is Coach India Bradford. Coach, how are you doing?
I'm well. Thank you, Brandon. How are you?
I'm doing okay. Thank you.
Good.
Talk to us about your week.
Yeah, had a great week. Finished this week with 24.1%. What I'm more excited about is that the students are actually duplicating the process, and they're seeing success as well. We had one student that finished with 10%, another student that finished with 30%. So just excited about, the ongoing growth and continue to expand and grow this Core 4 community. So thanks again, Brandon.
Yeah, I mean, one of the big things, India, like we all have different perspectives on coaching and how to coach and all the rest of that stuff and learning. And so you offer your course is fantastic, and you're seeing results. And to get 24% this week is just outstanding, because I talked to you one day and I think you broke even, right?
Yeah.
So what people have to understand is we're not always here to win. It's not always guaranteed.
Yeah.
But what is guaranteed is that if you're consistent, that if you've got a strategy, that if you've got the right psychology in terms of understanding really what you want to create with this and why you're doing it, there's a strong chance that the longevity is what matters.
Yep.
And so I'm super proud of the way that you guys have been able to pull this together and support your community. So
Thank you.
Great job. And we're going to do, absolutely more of it. All right. So next we have yield farming. And so one of the big things about yield farming that I have learned is that listen, I take everybody's course that's on here. That's how you get onto the Core 4 schedule, that you get a chance to be one of the professors for Core 4. And so what happens is, and this is what I want you guys to understand, is that we're looking for not exotic ways or, high risk ways. We're actually looking for ways that people are making sincere money and changing their lives. And we're just sharing our journey, because the money is where, I'll say it again, in your wallet. And so you got all of these struggling projects that are out here. If you look at these platforms, you got platforms that, were supposed to start back in October. And so now they're making some adjustments, and they got to tweak this and they got to tweak that, or they have to get this license here and they got to get that license there, and all the rest of stuff. And then you really wonder, what kind of license is that they're really getting? Or is it a stall tactic so people can still buy their program, buy their platform, give money to their scenario, and with no guarantee of success and no real opportunity for success? So the reality is that instead of being a part of all of that, just be able to go onto your computer and be an active investor. And I'm just going to pause there. Be an active investor. What does that mean? That means that you're going to learn this course, you're going to get support from the coaches, and then you're going to use the same strategy that they're using to get the same type of success numbers that we got here, that we reported to you. And so it's possible. Is it guaranteed? No, because they might do it at 3 o'clock in the morning and you're asleep, and you might miss something or you might not catch it, but at least you're on the right path. And when I was an athlete and a basketball player, one of the big things that I dealt with was going to camp. And so you had all these counselors that had all these skills, and they would show you different moves and different techniques and all the rest of the stuff. But then it comes down to how you apply them. Just because they applied that skill doesn't mean that just because you learned what they're doing doesn't mean that you can do it yourself. And I really want you guys to hone in on that. Think about it. I could learn the same in and out move that Michael Jordan used to be able to get by Magic Johnson, whoever. And so in that same move, I learned it, but yet I don't apply it the same way. I could be just as fast. I could be just as athletic. But if I don't read the floor the same way, which takes time, then that's problematic. And then what do you need when you're not reading the floor and you know the moves? You need a coach. And so we have Coach Vaughn, we have Coach India, and we also have a wonderful relationship. And he's our long form today. He's actually going to be on with us, and we're going to be talking a whole lot and learning about yield farming today with Coach JaEric Majors. How you doing, Coach? Can you hear us?
Hey, how you doing? Can you hear me?
I got you. How was your week?
My week was pretty good. Just gearing up to take a trip to a conference this weekend coming up. From Thursday to Saturday. So I've been getting ready for that. Just moving some positions around.
So tell me a little bit, so the community, I tell everybody, a big part of the Core 4 show is for you guys to actually be able to share this with whoever, right? Like this particular conversation we're having every week, to see your consistency on here and all the rest of the stuff, because people need to get to know you, to know that you're going to be here week after week after week after week, and that you have a commitment to the success of others. Now, obviously, we're all here, we're all trying to make money and all the rest of that stuff, but we don't want to charge so much money that you can't be successful, because if we have a good, fair price, then obviously there's an opportunity for everybody to win. But before we go deeper into that, can you tell me what got you involved in yield farming? The day before you learned about yield farming, and then the day you actually said, you know what, I'm going to really invest my time and effort into it. What took you there?
Well, what got me to that point? Let me start off. I'm going to try to make a long story as short as possible, but I've been trading. I'm 53 years old right now, and I've been trading since I was 18. I have a degree in electrical engineering from the University of Colorado. And when I was getting that degree, I was working at a brokerage firm as a part-time job to be a cold caller for a broker. And so I saw this computer screen while I was working, and I just thought to myself, wow. I saw options trading, and I thought, well, wouldn't that be great if I could program computers to trade automatically for me? I could probably make some money here because I saw this price fluctuation.
Absolutely.
So that's what got me into it. I got hooked at that point. And so back in the mid 90s, by the time the mid 90s were rolling around, I was so committed to that concept of using all the engineering things that I was learning to for that one goal of having computers trade for me automatically, that I wrote books on it. I made clubs about it. And I started trading. I actually was pretty good at engineering. So I worked for Ford. I worked for Intel. I made the chips that go into the Jaguar and all this other stuff. I just, thankfully I was gifted in engineering. And so I was able to make some money with which I used to trade. So I started trading in every market, from futures to options to, securities, all that stuff. And then eventually Forex came out, and I did a lot of work in that. And so in those early days, ultimately, I started a little fund of my own and realized that I had to get registered as an investment advisor. So I went down that road, and I did that. And then I started a registered investment advising firm. And I worked and I worked with some investment banking companies to vet technology back in the, when we were doing dot-com boom was happening in the early 2000s.
Mm-hmm.
And so I've always been into trading. I worked for some hedge funds. I started managing funds at that point. And when I got involved in investment banking, I thought, well, geez, now I don't really have to predict the market. I just need to list companies on the stock exchange, and I can kind of own the casino.
Yeah.
So I got involved in that for a while. Made a lot of money, lost a lot of money. Ultimately, though, I never got my foot out of just trading, and I always had this vision of being able to give something to the little guy, people that I didn't come from a wealthy background, but I always wanted to be involved in some kind of investment product where I could help people out, people who really needed help, people who needed to make money in order to improve the quality of their life. But most of the work that I've done over these years has been with hedge funds and software, writing software for them, and things that ordinary people really can't get into. Either the minimums required were too high, or the other than the stocks that I listed on the exchange, there was just most of the stuff I was into was for large private money, and just no way for people to get into the investments, where it was really complicated software that was running the show, and ordinary people wouldn't even have access to it. So I wrote some trading systems. I sold some that were very popular. Ultimately, when cryptocurrency came out, I really saw the novelty in that, and really became intrigued with it early on. I wrote a book on it in 2014. I've written several books. You can look up on Amazon, and you'll see I've written some books on trading that are still relevant to this day, about the psychology of trading and just about all the different markets, from options to futures. And if you're curious about how those things work, you can get that book. It's called Technical Analysis. And so ultimately, when cryptocurrency reared up, it was kind of a strange thing, because in my meditations, I kind of saw something like this coming. I know it sounds very weird, but so I've always been able to sort of have a prediction of where the monetary policy things are going. And so when cryptocurrency came out, I was involved with it. I was involved with the technology around blockchain. I've actually worked with some heavy hitters, and I helped to build a cryptocurrency exchange over in the EU. And during all that time, I listed a couple coins. I helped some people list some coins. And throughout all that, there was this thing that would come up. There was this concept of liquidity pools. So to get back to your, full circle to your original question, where was I when I heard about liquidity pools? Well, the funny thing is, I've known about liquidity pools since really about 2016, and I've known about them. And I know that you could take your own cryptocurrency and put it in a spot to enable other people to trade in their wallets and make money from that. But I never really knew the kind of money you could make doing that. I thought maybe you were making 12% a year or something like that. So I didn't really pay close attention. I even set up a pool for somebody and just never even looked back at it. Never looked carefully at it. But one day I was at a working at a meeting. about working for a hedge fund to develop some administrative software for them. And I talked to one of their traders, and I said, "What do you guys trade here?" And usually they can't tell me if I'm not working on software that has to do with trading.
Yeah.
But in this case, he said, "Well, we're trading liquidity pools." And I said, "Really? So can you talk about it?" He said, "Sure, because it's not a proprietary thing." I said, "Okay, well, great." So he was kind enough to go over to his computer and literally show me him taking a position of about $1 million of their fund money right there on his desk, and going into a pool, and within the space of 17 minutes he made $1,400. And I thought, wow, this is amazing. And he had several opportunities he could have checked out with about $5,000. And so this is happening in front of my face, and I was in shock. I said, can you actually make a video of that for me? He said, sure. And he sent it to me. And I actually have that video in my course. It's one of the videos that I show people as a motivation. So you say, well, I don't have $1 million, but
Yeah, no, I watched that video.
yeah. But the point of that is, if it was $100,000, well, you would have made, 140. And if it was $10,000, you would have made $14 in 17 minutes. So now we're getting into the range where most people might think to themselves, well, I've owned several other businesses too, incidentally. I actually own a pretty big roofing and construction company, and as we make money in that business, a lot of times some of the things I'd be thinking was, okay, where am I going to put my money? Because even I can't get into some of the funds that I have the software for, weirdly enough. But
Yeah.
so I'm always looking for things to trade for me while I'm earning money, and other things and other projects that I have going. So it's always a huge concern of me, wherever the money's coming from, that I have somewhere where I can put it and make it work for me. And it's not exciting to me unless I'm doing at least 5% a month or more. So when I saw that guy's screen, and it became clear to me, my gosh, I had no idea that you can make this kind of money in pools. That was about in I think that was early 2020, or just right after the pandemic was starting to slow down. I really started focusing in on this big time, and made a whole study of it, started trading it. And what I realized is that, my gosh, there's this thing that very few people know about. Even a lot of my friends who are experts in cryptocurrency are just unaware of how much money they can make in the pools. And,
So
and I found this thing where I can
what's the
go ahead.
difference, before I forget here, what's the difference between staking and yield farming?
Well, there's a lot of different terminology that goes around. It all sort of really means the same thing, but staking is something you can do in addition to. Well, first, let's just take yield farming for a second. What is yield farming? Well, yield farming is taking your coins that you might otherwise hold, that you might take a position in, say, Bitcoin or Ethereum, and you might be looking at the market and say, well, it's going to go up or it's going to go down. But while you're holding those coins, wouldn't it be nice if you can earn some interest on it? Well, yeah, you can deposit it into the pools, and you're actually not earning interest. You're collecting fees by letting other people use your own cryptocurrency positions to complete trades from their wallets. So on one hand, you're promoting sovereignty, which means that monetary sovereignty. In other words, the pools are used by people who are keeping their cryptocurrency in their hot wallets or their cold wallets. They're not keeping it in an exchange like FTX or Binance, where it can be lost, or because of some kind of regulatory issue or some kind of theft. Instead, the whole purpose of cryptocurrency is to allow you to maintain sovereignty of your own money. You put it in your wallet, and nobody else can touch it.
Correct.
But if you want to trade out of your wallet instead of trading on Kraken or Binance or FTX or any of those places, then how do you trade from your wallet? Well, you trade using decentralized exchanges that are essentially automated exchanges that are running on the blockchain by themselves, and you don't have to worry about people stealing your money out of them. You trade one coin for another coin out of your wallet, and that's how you do it when you keep your money in your own wallet and maintain sovereignty of your own money. Okay, so that's what liquidity pools are all about. I'm sharing my coins that are with a online, digital exchange, decentralized exchange like Uniswap or PancakeSwap or some of these things that everybody needs to exist. And right now, there's about $58 billion worth of people that have figured this out and are putting their money in these pools. And as people exchange one token for another, you get a commission for that. So that there's a whole.
So if we go back to the gentleman that put the $1 million in, he's making 1,400 every 17 minutes that he was basically getting that off of that, and you could just see it, boom, 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 and it was just coming. Are there
Yeah.
still opportunities like that?
Oh yeah, yeah. In fact, you know, well, let me back up 1 second and just share with you the kind of earnings that I look at doing are at least 10% a month. I mean, at least, okay.
Yeah.
If I really want to get aggressive at it, I can do maybe 30 to 35% a month. And when I say aggressive, okay, 10 is the baseline. How much time do I need to invest into earning 10% in a month? Here's the beauty of the pools. I don't have to invest more than, sometimes I check it once a week. Okay, for about 15 or 20 minutes. I mean, that's just how lazy I actually am. I don't, except for some funds that I trade for other people where I try to get more aggressive. On my own funds, I don't even really check it that often, to be honest with you. I've got other things I'm working on. I got my courses. I've got people that want to meet with me all the time. I got other cryptocurrency projects I'm working on. So like, that's the beauty of the pools, man, is that people who can have a life, you can live it, you can deposit your money somewhere, just like as though you would deposit it into one of these crooked programs that go under and you have a rug pull and all this stuff, except that you're putting it into a legitimate organization that needs to exist on the blockchain, that has existed for years and isn't going to go out of business and is actually automated completely. So that's a whole different ball game. Everything is tracked. There's no so I put my money in there, I let it ride, I get it out 10%. If I wanted to start getting aggressive and I happen to have a few minutes a day, I go in and I take more aggressive positions. It just means that I just have to check it more often. And then anybody out there who's done day trading or any kind of other trading that requires you to sit in front of your computer at a specific time of day, or have to be there for hours looking for a certain pattern or something like that, or a setup, or get notifications and take action. You don't have to do any of that with pools. You're just
So,
depositing your money and you're earning.
so let's go back to that. So, and this was actually interesting because my next question about this. So if I'm looking to invest in a pool, right, and maybe one's a stable coin and one's a volatile coin, right? So I'm pairing those up together. And I want them to stay within whatever the range is, because the projected range might be, say, I don't know, 5% a month, right? However, if I tighten the range, I might be able to get 15 to 20% a month, right?
Yeah.
Those are,
Let me just ask you one quick question that you started off with before we go into range, and I can share my screen if it's possible, if you're able to let me do that.
yeah.
I can share a screen with you, but you also asked me about staking. So the only difference between staking and yield farming is that there are certain uh, uh, currency pairs that you can get into, and then you can actually take that position that you have and you can deposit it somewhere else to earn extra fees, and that would be called staking.
Okay.
But in all of those scenarios, and the reason people stake is because sometimes they want to incentivize you to use a specific exchange. And so the exchange might have a token, and then so they're offering to pay you a little bit extra on top of what you're already earning, just to use their exchange. So that would be staking. And you can, in all these scenarios, though, you can pull your money right out of all these things.
Yeah.
So that's the difference between staking. I'm going to try to present my screen here for a second.
Let me
Let's
see
see.
it. Yeah.
Share screen. Let's see, entire screen.
Hold on. Let me see here. All right, go ahead. Let me see. It hasn't come up this because I have to let it on. Is it letting you share it?
I think so. Do
There
you
it is.
see it?
Uh-oh.
Whoa, we got an infinite loop. All right, let me just close that. Can you see that?
Yep.
Okay. So there it is. There's the whole show right there. I'm just joking. All right. So, all right. What I want to share with you, let me just find the right little screen over here. All right. Here's where things really get interesting. All right. There's a little exchange out there. People may have heard of it. It's called Uniswap. All right. And I'm pointing over here on the left part of my screen. And to give you an example, if you wanted to, if you hold Ethereum, okay, because you think the price of Ethereum is going to go up, or let's say you don't even care about what currencies are going up. Another beautiful thing about pools is I don't have to sit here and pay attention all day long to what the markets are doing.
Exactly.
I don't really need to know what they're doing because my whole goal is to earn as much commissions as I possibly can. I call it commissions, but it's really what they call fees. Okay.
Yeah.
Fees off of other people trading. Now here's a simulator. And if you take my course, you can learn how to use this simulator. And there are many other simulators out here. This is actually a very rudimentary one, but I have some other access to some other ones that I share in my video in the course. It's actually a masterclass. And let me just throw this out there too. Listen, with my goal of my masterclass is to get people to a position where they take the course, and if you have zero experience in cryptocurrency, you excuse me, you'll be up and earning within 5 hours. Okay, that is my goal.
I think that's, I've obviously taken the course, and I think that's extremely realistic.
Yeah. So there are other people that have courses out there. I'm aware of 2 guys in particular that have similar content to mine, and there, so actually 2 of them are friends of mine. But I don't particularly care for any course that's going to make me have to go through a couple of weeks worth of training before I can even get started, man. I just want to get right to the point here. So everything else, once I learn about how this works, everything else I can find on YouTube, I can find here, I can find there. So all the I'm getting ready to add into my course. I add into it all the time, and in about a week or 2, I'm going to add in there because I'm delayed on this convention I'm going to, but I'm going to add in there some real great automation tools that are going to blow people away. It's going to take their game to a higher level, and you can just try to figure all that stuff out on your own, or you could work with people that have experience in this, like I do, and I'm willing to share it. Yeah. So here's what I'm showing you up on the screen here is, let's just say that I'm interested in earning maybe 10% a month. Well, without going into the specifics of this, what I would need to do is buy some USDC and some Ethereum, and then I'd have to put it onto the Arbitrum blockchain. And I would go over here to Uniswap, and this is a simulator here, and it tries to help you to pick the right price ranges. So it's pretty accurate. And so they have this thing called concentrated liquidity. And when we talk about concentrated liquidity, we're talking about providing liquidity so that one person can trade from one wallet for one coin for another on an exchange. And where do these coins come from? They come from people like us who would deposit them into the liquidity pairs. Okay. So if somebody wants to trade Ethereum for USDC, they would come over to Uniswap, and they would be tickling the very same pool where I put my coins into to allow them to use. So in this simulator here, I buy some Ethereum, I buy some USDC, and I want to deposit into a pool. Well, how should I set up the pool? In other words, I have a choice now, and this was created as an incentive to get people to really want to participate in liquidity pools. The facility to allow you to concentrate the price range within where you want to allow your liquidity to be traded in. So if I'm supplying liquidity in the form of Ethereum and USDC, I can pick a price range where I want my liquidity to be used, and outside of that price range, I won't be earning any fees. But the narrower I make that price range, the more yield I will earn. So what kind of yield are we talking about here? Well, in this case, we're talking about a simulated yearly yield of 188%. Okay, let's compare Ethereum and USDC on the Arbitrum network. Now I'm using the Arbitrum network because I don't want to do this on Ethereum, because it's going to cost the fees are just astronomical, whereas Arbitrum, the fees are very low. So here in this little simulator, I can see what happens if I set the range wide. And why would I want to set the range wide? Well, maybe I'm going on vacation and I don't want to check this price all the time. Maybe it's zigzagging around in here, and I want to just keep earning fees all the time, right? So let's say I just widen that, but this is actually showing me where all the price action is, mostly. And there's another way of looking at it down here, so you can see the trend of Ethereum versus USDC. And I don't care about the fact that this trend is going down. I care about generating this yield right here. Okay, because if the price of Ethereum gets cut in half this year, I will still have earned, instead of 108% in this scenario, I would have earned 50%.
Right.
So I wouldn't be really at a loss in the end of the day. I would still have made money. And if the price of Ethereum happens to be going up, well, then you better set your range accordingly, something like that, because you're going to just be making money hand over fist, because you're also going to get the benefit of the capital gain of Ethereum at the same time.
Right. And
So,
that's you close out the position.
right.
Yep.
So here I am setting these ranges, and you can see here the dates that was within these ranges here. So I'm good for a week if I set this range here. But what am I earning in that week? Well, I'm doing roughly 109% a month. So it's unlikely I'd have to tickle this.
Is that a month or a year?
I'm sorry, 109% per year. So about, let's say about 8 or 9% a month with fire and forget. I'm just based on this trading here. Now, let's say I want to squeeze it down. I want to get a little bit more aggressive. I don't mind checking my computer maybe once a day or whatever. So I'm going to tighten that range down. Now I'm looking at 166% per year. Once I deposit my coins into this pool, guess what? Here's what my trading day looks like. I go have breakfast with my wife. We talk for a few hours. I then see my daughter wakes up eventually because she goes to college. And then we talk. And then I figure out who I got to call that day for whatever reason. I go look at my roofing company, and then, I might not check it today again. I might check it tomorrow. I might not check it tomorrow. If I'm on vacation, I'm not checking it at all. So that's the hard work I'm doing in trading in this to earn these fees. You can see it's a lot of hard work. I got to spend time with my family. I've got to make phone calls. I got to pay bills, that sort of stuff.
You got to actually like your family. That's right.
Yeah.
So
I got to go to church. I got a lot of things I got to do. I'm busy.
So let's go back to this, because this is important, I think, for all of us to know. So the amount of money that you can make from this, if you're watching the ranges, if it goes out of range, you're obviously not going to make the yield, but you don't really lose your principal.
That's right.
Right. So people are afraid of this word impermanent loss and stuff like that. And it could be bad. I mean, if you close in the wrong direction, or if you've got them going opposite direction, we talk about this in the course, you have to be thoughtful with what you're investing in.
Right.
But what I like is the fact that you have multiple pools. So you start us with one pool, and then you introduce other options for us so that we can be safe in one area, but we can also diversify and have some growth pools that might be at an even higher return. And they still follow the same principles. Isn't that correct?
That's correct. I'll show you an example of what I did last month on my daughter's account because I've been using her account for one of her accounts to do my courses, stuff like that. But anyway, here's the price of Solana versus USDC. And I got into some positions in that sometime at the beginning of February, way out here. And I got out of them towards the end of February, right around here, when we had this price of Solana going up. But here's the beauty of this. I don't care about this chart. I don't care. It could be going up. It could be going down. What I care about is maximizing yield. And on my own money, I don't pay as close attention to it as I do when I'm trading other people's money, because I do have some funds that I trade for right now. But what I want to show you here is when I went into her position, I took $4,700. I deposited it on the February the 8th. Okay. And then I withdrew that money, all of it, just to show you, into the wallet here on March the 5th. Okay. And it really hadn't started taking its tear up by March the 5th in Solana. But I started off with $4,700 and I ended up with $5,325. How often did I check this account? Well, I went on vacation in the middle of the month. My son got married this month. I didn't hardly check it at all. I probably checked it maybe twice a week, because that's all the time I had on this particular account. So I had a gain of $625, which is 13.2%. I'm happy. That was actually in a 20-day period in my spare time. Okay. So anybody can do this. This is not me just saying, oh man, you got all these things and look out for this and look out for that. The only thing where people make a mistake is they see the price fluctuating of the positions and they think that they might be losing money because they see their capital going up and down. But that's going to vary throughout the day, and that's not what you should be focused on. You just focus on earning yield like I was showing you over here. You just focus on how much yield am I earning?
Yeah. And when it fluctuates like that, when you close the position, are you closing it at that price? If it went down, say $100, or
Yeah.
kind of
Yeah.
want to wait until you know where your break even point is as it fluctuates?
Yeah. I mean, when I closed out that position I just showed you here at the end of that month, I just dumped everything in this wallet just so that people can see that I went in at 47 and I came out at 5325. I didn't even care. I wasn't paying any attention to what was happening with the prices line. I could tell when I looked at the pool itself that there were some fluctuations going on, but that's not my concern. Here's the actual screenshot. So that's how I keep track of my portfolios. I mean, there were times when right out of the gate, within the same day practically that I made this deposit, this was on February the 8th. Well, by the Saturday, I put in 4,700. And by the end of the day on Saturday, look at the capital appreciation right there. I could have walked out with $300. That was because the price of Solana was going up. But I didn't do that. I didn't eject at that point. I just let it ride. In fact, here's another day here. That's on the 12th. So that was 4 days later. It was at 5,126. Now I do think I scalped it, as a matter of fact, right here. Meaning I took some money off the top of this and just which you have the option to do. And then because I scalped quite a bit off of there, it went, I saw this kind of action happening here. But again, I'm not paying attention to that because ultimately, guess what? It came back up again to $5,000
Exactly.
from here. So what I got to do is I just got to stay in and make sure that I'm earning quote unquote yield up here. So I took a position. I took some money off the top. I remade a position, and then I'm just trying to show you here. Okay, so this was earnings of $17. That was probably over a period of a day or two. So the only thing I would do is harvest my yield. I just press the button and I harvest my earnings, and the rest of the stuff I just let it ride.
And every what do you call it? Pool, like that was Orca, but you have Uniswap, you got Sushi Swap, they all have this. So you got Trader Joe, XYZ. They all do that and give you the opportunity to harvest, but they may call it something different, right?
Yeah, like in Solana, I mean, Orca here, which I'm calling everything is named after like fish, so they call it like whirlpools, which is cute, but in other more robust exchanges, they call them pools, liquidity pools and yield, they don't play around with it. There's other exchanges like HyberSwap. That's pretty good. They got some pretty good deals on there. And so these are the kinds of things that you don't have to go out and do too much work looking for, because I'm going to end up updating the courses and my picks to tell you, hey, go look at this exchange over here. Although we have kind of a community, I'm starting to do calls every 2 weeks. First Wednesday for people who buy the course, and second Wednesday. And sometimes people come in there and they see things I didn't see, and that's great. They can present, and
that's what building the community is all about.
Yeah.
Let me say this. It seems like it's pretty straightforward. It seems like if I were to have done this, Eric, as opposed to some of these other platforms that are out here, I could have made more money with this than I could have with anything else, and I would have kept the money in my wallet. And the opportunity, and this is what I want all of us to understand, the opportunity is still here 100% for us to basically kill the game. To be the superstar, to be the rock star, to be the Michael Jackson, to be the Michael Jordan, to be the Kobe's, to be the LeBron. You can do it all with what we're talking about here with Core 4. And one of the great things that I'm going to say, we get a discount by being a member of Core 4. All of us get a discount on your course. We get to participate in everything that you're doing. You're also coming to the live event, so people will get a chance to meet you, talk to you, ask questions. You're going to actually have all of this up on the board for the live event. It just makes sense for people to do this. So I want to say thank you, Eric, for everything that you're doing for just the community at large, but also from Core 4. So I want to thank you so much.
I appreciate you, and I look forward to working with you guys. And when you say you got a discount, you're really getting a discount, because I have some partners that join my business and they cranked the price up to $2,700 for the course, adding a bunch of stuff in, and you guys are still getting it for
$600.
Yeah, about $650. That's right. So it's $2,700 down to $650. You got in at the right time, and there's going to be a lot more stuff going in there.
Well, from my heart to yours, thank you very much, Eric. All right, guys, listen, I know I like to wrap up right at the hour of time. So just know I'm very, very excited for us. We have our event coming up June 28th to June 30th. You'll see that in the description. Join, become a member of Core 4 as fast as you possibly can. It's only $50 while we're in the pre-launch, and let's have some fun. I love you guys, whether you like it or not. Core 4 is out.